Obstacles are placed in our way to see if what we want is really worth fighting for. An anonymous quote there, and I love that one. My friends, 10 to 15 minutes a day. If you can conquer that obstacle, that is being persistent on a daily basis for just a few minutes to follow these stock charts with us, you can master this. And what is more important for your long-term finances than being able to successfully chart stocks, being able to follow price movement accurately? Had a great live question and answer call-in session with the Patreon members today. Appreciate the Patreon support. Patreon members, please check your email. You will see a recording of that in case you weren't able to join us. I know we have folks all over the world that listen to the program, that support us. Patreon members, thank you so much. Let's jump into the stock charts. Oh, by the way, for subscribers, something great in the notes. I have been working on the third addition to the book, Charting Your Way to Wealth. This is the HI-E, the Hyperlink Electronic Book Edition, and it will be going out to all purchasers of the book. It's going to take me a while to do it, but go ahead and buy the second edition if you don't already have it, and we will send you out. This is going to be an ebook, so we're going to send out to all of our purchasers. If you purchased the first edition, I sent you an e-version of the second edition, and I will send everyone who buys the book a copy of this third edition. But I'm very excited. A hyperlink electronic book. We are going to have videos, graphics, definitions, links, in other words. As you read, you can also listen. There's going to be an audio edition that comes with it, links to that as we go along. And you'll see in your show notes today, Charting Your Way to Wealth, the first chapter. I've already recorded that. I recorded it along with graphics, so it's an audio of the first chapter with all these graphics to go along with it. So I think you will enjoy it. And again, we're going to link to explanations of all that we talk about. Going to show you everything in the book as we do it. So we'll be putting that out as we go along. So again, if you don't have the second edition, go ahead and buy that now. We'll send you an autographed copy. It's a spiral-bound book. We'll get that to you immediately. And then as soon as I finish the third edition, we'll get that out to you. But don't wait for that. Go ahead and get it. Now, let's talk about these charts. We see the S&P up, the Nasdaq 100 down hard, along with gold and bonds. So let's look first at what's going on with the S&P 500. We always start with the weekly chart. Large chart, work your way down to the smaller one so you can see the big picture, the middle picture, and the little picture. Now, let's talk about what we see happening. We have a red spinning top. Indecision, we can see open box, so it's a slowdown in the up movement. Price percent oscillator flat. Derivative oscillator losing momentum. Go to the 2-day chart. It's flat also on the price percent oscillator. Derivative oscillator gaining downward momentum. Look at that sideways slide. Now, we are not in a trade on the S&P. Why? Because this 2-day cross going down took us out back on the 2-day candle ending the 21st. So again, lots of indecision there. Will we have a crossover going down by the end of the week? I don't know. Market could turn around and that 2-day could cross over going up. So we'll wait and we will see. Again, only up for the day 0.58%. Now we look at our half-day chart. We can see where things are up in the morning, further up in the afternoon, pushing through the weekly and the 2-day trend lines. So again, something to pay attention to. Let's go ahead and redraw our half-day chart. Our half-day trend line, and we're connecting pretty much 3 candles. Not quite, but again, it is the smallest chart. I'm not going to sweat it. So we're going to leave the S&P 500, go to the Nasdaq 100. Like we said, down big, 1.39%. Of course, we had that too. Well, we'll talk about that in a minute. But as we look at what's going on with this, we can see that we had things moving up quite strongly over the prior week. And then this big slowdown, red spinning top, first red candle we've seen in 5 weeks starting the week off. Looks like we might have a weekly vertical crossover going down at the end of the week. Derivative oscillator losing momentum. We can see the price percent oscillator pushing through the red signal line. We'll wait and see as we look at the 2-day chart. Remember that last 2-day candle on Monday crossed over going down, even bigger, representing Tuesday and Wednesday. So we'll continue to keep our eye on things as they move along. Half-day chart down in the morning, sliding sideways in the afternoon. But again, we're watching for a potential weekly vertical crossover going down. That will be important on the cues. That is where we are. We'll continue to follow this all the way to the end of the week. If there is a shorting opportunity, of course, we'll be looking for that on Friday afternoon at the close of the market around 350. Again, would love for it to really be accelerating away, but we'll see. We'll wait and see. Now, they typically do work, don't they? So if you've taken our 3-part training on options made simple the charting wealth way, that's available at any of the levels of support on the Patreon support page. Please go ahead. If you haven't supported us that way, do so. We'll get out to you immediately, charting your way to wealth, the options made simple. So we'll get that to you. Now let's move on to bonds. We see bonds down for the day over 2%. Bonds are currently, we have been in for many, many months. We go all the way back to May of last year. Can you believe that? Bonds have been in a downtrend since then. We did have a period where they went up, not enough energy to cross over going up, and that transition continued down in bonds, actually accelerating, pulling away from the red signal line this week. Long wick on the bottom, bit of a wick on top, so it's been a little bit all over the place, but down big for the day below that weekly trend line. Look at the 2-day chart, and of course, what happened? Told you to keep an eye on things. What have we seen occur? Of course, boom, at the end of the day, had an opportunity for you, and we talked about this yesterday, to watch for a 2-day recross going down. Told you to backtrack that to see how accurate those 2-day recrosses had been in the past, to make a decision on whether or not you thought that was worth going into. Again, we can see things really accelerating down there. So we're going to go ahead and we've moved our trend line, we've moved our arrow, we have put in the 2-day recross going down, jumping in point somewhere around the 155 mark. We'll see how that 2-day recross plays out as the price percent oscillator crosses over strong going down, derivative oscillator gaining downward momentum. Look at the half-day chart. Of course, that crossed over going down back on the morning of Tuesday, the 5th of January. So we'll see how things move down in the morning. Candle down a little further in the afternoon as far as the candle body goes. So we'll see what's happening. What typically it means when bonds go down, of course, usually means that stocks are going in the inverse unless you have a systemic market crash where people are dumping everything to try to cover losses. So we'll wait and see how this shakes out. Lastly, we go to gold. It was down big for the day also, 1.62%. We were hoping we might have a crossover going up at the end of the week with gold, and it's just slowed down. So we'll see. May still have that occur, but it hasn't happened yet. And of course, we never call a crossover until the end of the week, till about 3:50 on a Friday afternoon, but it's further away than it was. Derivative oscillator still a little negative, price percent oscillator negative, heading up. Going into the 5th week of up movement, still a nice big candle, so we'll continue to watch. 2-day chart, we can see it ended with a red spinning top, again losing a lot of that acceleration that it had been feeling. Price percent oscillator losing momentum heading up, derivative oscillator flat on that 2-day chart. Half-day chart, you can see we had 2 days, a nice strong up movement, and then boom, just fell off. So we'll watch and see how those things continue to proceed. Just for the Bitcoin fanatics, up for the day 8.46%. Check out that beautiful chart. Of course, we had Bitcoin crossover going up back on the 23rd of October. Those of you like 2-day recrosses, We had that 2-day recross giving you another opportunity back on the 17th of January, somewhere around the $21,000 mark, of course, to a high at this point of 34,764. Boom. So again, you can, when you find ETFs and stocks, commodities, Bitcoin, other things that are trackable on our charts, we encourage you to practice, trade those things. Now, again, keep your eye on silver. Are we going to have a crossover at the end of the week? Of course, silver was weak for the day, down 1.29%, but it's still looking like that might be occurring, so keep a close watch out for all of you silver freaks. That's where we are as we end the day. Please enjoy the new video from the 3rd edition of the book. I'll continue to work and pump those out as quickly as I can. We appreciate all your support. Buy the 2nd edition of the book. We're going to send everyone who's bought the book in the past, who's buying it now, the 3rd edition, but it's going to be virtually the same material, just in that high E format. So go ahead and support us. Don't wait. You need the information now. Follow the link in the show notes. God bless, my friends. All the best from the whole team at Charting Wealth World Headquarters.